This is the Russell 2000 daily data, and it's for 3 or 4 months of time. Let's just take a look at it from this point in time, and we'll go under the assumption that this is a 3, and this whole congestion period was a wave 4, the new high was a wave 5. At least that's a possibility. And we're not going to bring more data on, just this data. We're going to look for some time targets on the downside. This is just the 127% external retracement of the wave 4, typical end of wave 5 target. Well, where are we at as of the last bar in the chart? Had an impulsive decline, just a real nice 1, 2, 3, 4, 5. I got that labeled as a 1 or A. We had an A, B, C. This is an irregular or expanding A, B, C. But it just fits in just about perfectly following this 5-wave impulse trend for a probable 2 or B. And then I've got the data up to date as of taking out this swing low. So more than likely, the Russell is making a wave 3 or a wave C on the downside. So let's make some time targets and see a potential time target on the downside where we might get, we'll call it support. A couple simple things that we do is alternate time projection and then either high, high, low, low, something along those lines. So let's do the alternate time projection first. That's always, well, it's usually anyway, the first one that I do. Make sure we got this chosen as, well, not just one. We want to do 1 and 162. There we go. We're going to measure off the wave 1 or A, and then we'll project out 100% and 162%. Now, should we do it from where I got labeled the 1 or A low or this irregular wave B low? Well, typically we would do it from this low, the first low, the wave 1 or A low, because that's the completed wave structure. That's a completed section. And then this ABC is a different section. Be that as it may, sometimes I do it from both of those lows, and we see where we might have dates overlapping with each other. So I'm just going to go ahead and do it from the other low as well. Let's square the chart up a little bit. So we'll do the same thing. We'll measure from the high to the low, and then from that low. Well, that's interesting. There we go. The 100% alternate time projection of the wave 1 or A is at January 31st. Then on the 15th, it's the 162% alternate time projection of the wave 1 or A, and it's the same day as the 100% alternate time projection from the high to the low of this wave B. And there's something else I want to take a look at here, is just notice that from this low to this high is 21 days, where from this high to this low is 18. That's pretty close reversal. So in the event we're doing some kind of reversal cycle, I'm just going to do the 100% of that 21 days as well. And the one other thing I do is this high to low. Let me put that in. Looks like we're getting quite a cluster around the 31st here, aren't we? Let's take a look at what we've got here. It looks like around the 31st to the 3rd, that would be our primary kind of target zone or time target zone. As the market declined, we'd want to look at the other technical positions. And why is that? Let's take a look at these time factors. 100% alternate time projection of the wave 1 or A from the wave 2 or B, the typical time target for a wave C, and the minimum time target for a wave 3. Let's move down here. How about at the February 3rd? That's just the 100% time retracement. And basically, it's the 21-day count from the last high, because we were looking at, well, this was 18 days. This was 21 days. Those are pretty close. Maybe around every 18, 19 days, we're going to be looking at a reversal. So let's put that in. And then the other key that we have in here is the high to low. And that would be a significant time factor for around the maximum time in the downside before we made a comparable low to these highs and these lows. In other words, a low that probably would last a week or two anyway. So let's just advance the data. The only thing I have on here is the momentum indicator. We could put price relationships on. Let's just use the momentum indicator, and then we'll see if we can do a count if it continues to decline. So I'll add some bars on. We got another bar. Ooh, strong down. Strong reversal there. We're well before even the beginning of the January 31st time. Sideways. There we go into a new low. Well, if we're looking at this as a 1 and a 2, this is probably a 3 and a 4. And if that's the case, let me go ahead and put that in so we have some perspective. If that's the case, let's just do one price relationship. And it's the one I use all the time whenever there appears to be the end of a wave 5. It's that external retracements of the wave 4, 127, 162%. We can already see that the momentum has actually made a bull reversal. The next day, well, where's that low at? Let's take a look, 1901.36. So we're like less than 2 points for the 127% external retracement. I'm going to square up the chart and bring these time factors down. Let me pause it just for a moment. What I've done here is I've just kind of organized the chart, brought these time factors down. What I usually do is I actually write on the chart, have a little, note sort of feature. All your softwares have that, where you can write some notes on the chart. That January 31st to February 3rd would be a time target that I'd want to be aware of if the Russell were declining into that time period. And if by chance it continued past the February 3rd, then I'd want to be looking at February 15th. That's where we got the 100% alternate time projection in the 162%. So let's take a look at where we're at now. This last bar in the chart, this is a pretty significant, what we call bull reversal day. That was on the 28th, and the daily momentums are already bullish. Well, the 28th is a Friday, so the 31st is a Monday. So we're just one trading day prior to our time target of the 31st to February 3rd. And the key here is we're one day before that. It's always nice when it hits directly on, but if we're coming into that time period and looks like that we have a completed wave structure, this looks like a 1 through 5, and then we get that reversal, that's a wake-up call. It has a good possibility to have completed what we call at least a daily low, and it would be another 5-wave decline. It would have a correction greater in time and price than any correction since the beginning of that decline. So that's really useful information to have, to be prepared the 31st to the 3rd. And one day before then, our daily momentums are already bullish. And on the Friday before the Monday, when the time period starts, just about tags. It's within 2 points of the 127% external retracement on a bull reversal day, and a possible 5-wave decline just one day off for the 100% alternate time projection of that decline. Pretty good information with the potential to have made a low. And depending again on your time frame of trading and all that, and how you use that information. But right now, pretty much everything's in place to complete a daily low. So what would we be looking at now? Let's just say this low is complete if the market starts to advance. Well, there's a couple things. Let's go back to pattern first before we do time. And if we consider this a wave 1 or a wave A, then that's the wave 1 or A closing low, and that we would have to consider that if the trend is bearish and this were a wave 3 or maybe even just a 1 or a 3, but the point would be is the market should not come in, make a close into the range of the wave 1 or A. That's at 2147. So we just put that in there. That's what we always do once a wave 1 or A is complete and it looks like we've completed a wave 3 or a wave C. put that closing overlap price in. It helps us to understand that if the market is bearish and bearish higher time frame, should not close above that level. Then we can make some other price retracements, but let's focus on time right now. Timing of potential correction. I'm going to move down to the 240-minute data. Let's take a look at it. So this is the 240-minute data, and it's I've added several days of data on from that low that was made on the 28th. That was that wave 5 low. And we had a nice 5-wave advance for a wave 1 array. Once again, we don't know if it's making a correction or the beginning of a new bull trend. We're going to focus primarily on time factors and reversals, but we're going to look at a little bit of price, a little bit of pattern going into those time factors. So 1 array potentially advanced, 2 or B decline. Now it's made a new high, so we're looking at a 3 RAC. So the first thing we do, if it's making a correction, and we're not going to prejudice ourselves yet that it is, but if it is, it typically would make a 38 to 62% time retracement of this impulsive trend down. Let's just add that on, 38 to 52% time retracement. We'd want to be aware of around the February 8th to the 14th. For the potential time retracement. That's a broad zone. So we're going to put some other time factors in here besides those, just the time retracements. And by the way, this level was the wave 1 array low. So we want to, it's not the close, but it's the extreme low. We want to be aware of that level. So there's a couple things we can add into here now that this is done. Number one, we can do the 2 alternate time projections, the 100 and 162. So it comes in at the 9th. That's the 100 alternate time projection. And the 162, usually the maximum for a wave C anyway. And that's not too far off. I'll bet this would be on a Friday probably, and the 14th is probably a Monday or so. Pretty close to the 62% time retracement. But since this would be the maximum on the upside, if the market's making a correction, you see we're narrowing that range. And so instead of between the 8th and the 14th, we really narrowed it down. More than likely it's around the 9th to the 11th. What's a couple other time factors we can put in here? Well, one would be just the recent high to high. Let me go ahead and put that in, 100%. Looks like we've already passed that up. It is already exceeded that. So what's the other one? This is a real key one. This is the one that, boy, it's been more helpful than any other single time factor. And in this case, low to high would typically be the maximum time before a comparable reversal to what I got labeled here as a wave 3 or C, or this 1 or A, or this 2 or B. And if the wrestle is making a corrective advance, that should be the maximum for a wave C around the afternoon of February 11th. Look where that happens to coincide with. Let's clean this up just a little bit. I'm just going to take that off. It's within hours, actually within 1 bar of this 240-minute data, of the 162% alternate time projection of the wave 1 or A, which is also typically the maximum for a wave C. And it's just a little bit before the 11th. Yeah, the 11th is a Friday. So this is a Monday. So the Monday would be typically the maximum time retracement. Boy, we've got some really valuable information here, particularly when we're not going into the details, but if our higher time frame trend and momentums and everything else were indicating that the trend is bearish, we come in to February 11th, any time after the 9th, but to the maximum of the 11th, high probability of completing a corrective rally. Now, I've already put in just the 38 to 50% retracement. So I'm just going to add some data onto this chart. So here we are. This date is February 10th. 1 day before the maximum probable the market's making a wave C high. What's happened as of the last bar in this chart? Boy, this is really good information. This stuff happens a lot. Be aware of it. Be aware of the subtle pieces of information a market is giving you. So coming into just the day before the maximum time target to complete an ABC correction, this market, this is the Russell. It spikes up a little bit above the 50% retracement, typically the maximum, it's in the typical zone for a retracement for a wave 4. And then it makes a sharp reversal and trades back down into an overlap of what I got labeled the 1 or A. As of that bar in the chart, we have significant time factors. And of course, the price relationship on the retracement, and then the pattern overlap. Fantastic information to have that more than likely the Russell has completed an ABC correction. What follows an ABC correction? Continuation to a new low. I'm going to add some data onto this chart. And that's the last bar on the chart, and guess what? That's last Friday. I'm recording this over the weekend. That data is right up to date. I don't know how this is going to unfold. What I do know, remember, we trade, make decisions on what we know. Here's what I do know. I do know that we've had a potential 1 or A, 2 or B, 3 or C, with 2 clearly defined impulsive trends down, in which the low on the 28th was made 1 trading day from the high probability time target to complete at least a daily low. What I do know is we made a nice 1 section up, 1 section down, a 1 or A, 2 or B, and we've come right into the 38 to 50% retracement of this last advance. That was a typical wave 4 target. And we made the top, so far at least, within 1 trading day, not just of a time factor, within 1 trading day, within a few 240-minute bars, of what should be the maximum time on the upside if this market is making a correction. And then from that area came down and traded into the overlap range, indicating that indeed this is a correction and it's in a position to have completed an ABC correction. That's what I know. Can you use this information for a trade strategy? Of course you can. You can figure it out from there. When we get into later chapters or later courses, we'll go into more details on developing specific trade strategies. But right now, time factors were really valuable in identifying the probable position of the market. Again, I don't know how this is going to come out. This is last Friday. I'm recording this on a Sunday. You can look it up at a later time. In this lesson, we're just going to look at a number of examples of how we think about some of these time factors. Just the most simple ones, how we would apply them, what they mean, and how they can help us to understand the position of the market and potentially then develop a specific trade strategy. We're not going to be looking at a lot of the other aspects of the trade plan, such as the momentum or the price or the pattern, really, but just some simple time factors that anybody with any charting software can apply to help them to understand potential reversals or potential strength or weakness in the market. This is Newmont Mining. It's a mining stock, very popular mining stock to trade for people who like to trade mining stocks, high volume, that sort of thing. More or less follows the trends of gold. So let's take a look at a few positions of the market. Let's take a look at this daily data as of the last bar of the chart. Let's say we're looking to identify at the least the next low comparable to these lows, which for the most part, they just lasted for 1 to 2 weeks. The advances off of these lows were corrections within a bear trend. Maybe the higher time frame position of the market is indicating that the next low will be a higher time frame low, maybe a weekly low, something that's going to be more significant. regardless, is let's just look at some simple time factors to see if they'd help us identify a potential low and a time position that we could use as part of a trading plan. We want to look at the alternate time projections, some various low to low to lows, and then maybe high lows. So as of the last bar of the chart, it looks like this Newmont's been down for about 2 weeks. Let's just put the 100% alternate time projections. We don't even need to do this one. It's so short, we know we've already exceeded it. Let's do the one that was just complete beforehand, and let's see where that falls. So we mark off the high to the low, and then I got the 100 and 162 alternate time projections marked off. Well, how about a potential low to low? That's the other one that we just naturally mark off, isn't it? Yep. So let's do that. I think I already have this set for 100. Yeah. Then we got 100% low to low. So just given these two time factors, let's take a quick look at them without adding data. This was the most recent low to low to low. Looks like that's right where the market is right now. Newmont is at the new low. So it's reached that low to low to low. That's just a couple days short of the 100% alternate time projection. So we've got little time factors right in here, the 20th to the 22nd, that we might want to be alert to a potential low. And if it exceeds this time period, then the next time period we want to look at would probably be around the 162% alternate time projection. And then we'd look at an intervening low to low to low, maybe from this low to this low, and then forward from that. And then, of course, what would be the probable maximum time before a low would be made? And that would be this high to low. So first, let's see if it continues beyond this. Certainly, if we had some momentum reversals, or we're running into some significant price support area, end of wave target area, right around this time period, we'd want to be alert to this as a time period of just a simple low to low to low and 100% alternate time projection. So before we add some more data on here, let me just reduce some of the data on the chart, focus in on the more immediate position. There we go. Okay, let's add some data on. We're looking to see if we get any kind of reaction around the 20th to the 22nd. So far, it was just a couple days up, then sideways, and a new low. So we can ignore this time period, and now we're going to focus around the August 1st time period, but we're going to add a couple time factors in here. So indeed, we did have a low there followed by just 2 days up, but then a continued lower. This might have even been a trade setup if we had like a momentum reversal and that reached a specific price target. I can look at this decline and say there definitely wasn't a 5-wave decline. It went to a new low. This should unfold in an impulsive kind of decline, just like this last section did, kind of a 1, 2, 3, 4, 5, and a sloppy, correction here, and then should be impulsive. And it looks like that's what it is now. So let's just clean the chart up and get rid of that one. I'll get just rid of that. And then we're going to add the two time factors we just talked about. So we want to keep in mind this is the 162% alternate time projection. And typically, that would be getting around the maximum of what we'd anticipate before we had a low comparable to these other lows that generally last at least a week or two. So the other time factor, now we made a new low, we look at is the new low to low to low. Let's just mark those off. That's the one that looks like the low close. Well, it's right in the middle of this group, so let's just do it right there. That's the low to low to low. Now, what should be the maximum time before we complete that low? Well, our favorite, the high to low. High to that high and to the next low. So what we've got now is not just any three time factors. We have the 162% alternate time projection. We've got the simple low to low to low around the fourth day after that. And that's a Monday. So this is a Friday and a Monday, and this would be a Wednesday. and that's the high to high low. And this is a real key one because that's very reliable to be the probable maximum time before we completed a low of significance, a low at least significant as these lows, the high to low. So we've got anywhere from the 1st to the 6th. More than likely, we're going to complete a reversal of comparable to these lows. Let me just add some data on the chart. So this is kind of what we're trying to go through is how do you think about this? How do you keep it simple? Add a few simple key time factors, and then look at the market as it reaches those little time zones. And if it exceeds the certain time factors, what does that mean? Then what would be the probable maximum time before a comparable low was made? So then we made another low. And so look at what we got going on here. 1, 2, 3, 4. It looks like what we call an ending diagonal, doesn't it? And now we have reached right into the time as of, the low close was on this day. That looks like it's the 1st. And so far, the intraday low was a couple days later on the 5th, just 1 day prior to the high to low and the probable maximum time on the downside. We can even add in this low to low to low. What day does that come in? Oh boy, it comes in the 6th also. That's fairly significant. That's a real short-term low to low, and it comes in at the maximum time probable before we continue or before we make a reversal comparable to these migrations. Look what happened. We got here an outside up day closing near the high right in this time on the exact date. And we've had a reversal at least comparable to these other lows that lasted a week or two. So the important thing here is how to think about time. You kind of look at time like you do price. If a market exceeds what is a typical sort of price target, given a particular wave structure and the recent swings in the market, that tells you something. That tells you that it's unusually strong, and then it's probably going to continue to the next time or price target zone. Well, it's the same with time. If a market exceeds the probable time, which would typically make a reversal, more than likely, then we can look at the other time factors that tend to project what should be the maximum time. Let's just look at a couple more. So this continues to be Newmont Mining. I've just added several weeks, actually a couple months of the daily data on. Let's just take a look at a couple situations and bring it right up to date. After the low that was made on the 6th, which we had these time factors for, Newmont Mining then advanced in just a clearly defined 5-wave impulse. So we know that this was a new low. I could add, the data back on, but it had been down for several months. And now all of a sudden we have a 5-wave impulse that usually indicates the higher time frame trend has reversed to bullish. And we're going to have at least one correction and another 5-wave impulse at a minimum. We call this a 1 or A, and then we made a potentially 2 or B, etc. What is the typical time retracement following a 5-wave impulse for a correction? Around the 38 to 62% time retracement of the 5-wave impulse to complete a correction. Well, this correction was complete right in that 38 to 62% time retracement of the 5-wave impulse. Just wanted to show you that. These time factors just repeat over and over again, not all the time, but they just about always give you some good information. Had another advance 11 trading days, which was just 1 day off of the 100% alternate time projection of this 12-day advance, and then declined. It looks like an ABC correction, but it looked like it made a new low and even a new closing low. So it'd be something other than the typical ABC correction. The point was I just wanted to show you this. 11 trading days down. So we had 12 up, 6-day correction, 11 up, 11 down. Let's see if we can use the recent time factors and just some simple stuff here to help us identify potentially another top similar to these tops, something that's going to last for maybe 2 to 3 weeks. Let's even say just a week or two. From a trading perspective, that'd be really good information to have, wouldn't it? Yes, it would. Okay, let's add some time factors on here. I've reduced the date on the chart just a bit, but it does show this last advance up that was 12 trading days, the correction into the 62%. Time retracement, 11 days up, 11 days down. I've just got a couple time factors on this chart. I definitely would want to be alert 11 to 12 trading days off of this low. And right on the 11th day, another high was made. It only lasted about 3 days, but it happened to also be on the same day as just the minor little high to high to high. Little 3-day correction occurred there. But there was no real pattern completion. It's really a mess here. So let's do a few time factors, just see if we can identify a probable time for another top of equal or greater degree than just these 3 or 4 day tops. So let's keep it kind of simple. Let's do the high to high. So should we do a high to high from this high or this high? Well, it looks like we're already beyond the 4. This is just 4 trading days from that high. So I'm going to do it from this high, from where basically the market went sideways, popped up one day, and then came down. Again, news event time. I don't know what's going on here, but let's go the high to high. That's on the 30th. That'd be a pretty good time to anticipate a potential high anyway. Similar to these, it might only be 3 or 4 days. Something we might want to be aware of. Let's do this recent low high. Comes on the same day. And then do this little wider range, low to high. Again, we're just putting in some of the common time factors. See if they happen to overlap with each other, to be within, ideally, 1 or 2 trading days. And so far, we got the 29th, the 30th, and the 30th. And what about an alternate time projection? Well, if we did this alternate time projection, I think we're already past that. So we probably wouldn't need to add that on. Yeah, we've already passed that. So we don't need to add that on. So let's just be alert to this is a simple high to high to high, and then it's a low high. That's pretty significant. And it's another low to high, and that's fairly significant. So we definitely want to be alert around the 29th or the 30th for a potential short-term top at least, because we're just really measuring from short-term tops the last 3 or 4 days. But that might be useful information for us depending on what our trade plan is for this market. So let's add some data. And as of the last bar in the chart, a new high right into the December 20th, so it's the 29th and 30th that had the potential for completing a high similar to these highs. Let's add some more data. Went 1 day higher, came down fairly more significantly, and quite a bit more significantly. So we might want it to be alert to the price, the pattern, and the momentum position as we came in to this time period of the 29th and 30th, right near the end of the year. And then this is the last day of the year, that last pop, and then turned around pretty substantially for just a few days, so far anyway. But it helped us to be prepared for a similar type of correction from where these time factors had been made from. So let's just add some more data. So I'll add some more data onto the chart, and I've cleaned it up a bit, taken the other time factors off, just so if, oh boy, I'm just going to say if we happen to make a new high, then I'm going to do some more time factors to see if we can identify the time for that high. Boy, it must be a big news day right there. If I look at this data, I can just kind of basically look and say, well, these advances tend to be kind of similar. There's nothing like significantly greater than the prior advances. So even though we've had this real substantial update to a new high, I'm going to put in some time factors because it looks like we're around the time to make a top similar to these highs, which were only a few days each. But if it's a higher time frame top, what happens is just like multiple degrees. If we can identify the end of the smaller degree, it'll probably coincide with the higher degree. And it looks like to me it's pretty rough, but it could be a 1, 2, 3, 4, and a 5. We're potentially in a position to complete a wave 5. So let me add some data onto the chart. Not some data, let's add some time factors, and let's keep it fairly simple. Let's start with the high to highs. So the obvious high to high, of which Newmont has already exceeded that high. What would be another high to high we might want to look at? Well, if we're kind of looking at this as a 1 and a 2 and a 3 and a 4, let's start at this little lower high. And I would think that that would probably be about the maximum time, again, if this is a legitimate 1, 2, 3, 4. So we're not going to get into details of the pattern, but it's just basically high to high to high. What other one would we want to do? Alternate time projections. I can do the alternate of either one of these or both of them. Let's just see where that tends to fall. So we're already a couple days past that one. And we're a day past that one. So what might we look at? I'm going to erase that group. So what's another time factor we could put in here? Let's just put in, we're going to have one each of the basics, low, low, high. So we have the 100% alternate time projection of this section up. We have the high to high to high, and we got the low, low, high. And the low to high is the 21st. That's at the end of this little time period. And we would anticipate that would be the maximum time before Newmont made a top at least similar to these tops. Now, these are only a few days, but if we happen to be making a wave 5, it'd be a much higher time frame top. So let's just add some data. Here we are. As of the last day, we made this reversal day. No follow through this, obviously, in some sort of news day. No follow through to it. Wasn't anything really fundamental. We're right in this time period of the 18th to the 21st where we made this reversal. This would be a time period we'd want to be alert to making a top at least similar degree to these tops. And again, if it's a 1, 2, 3, 4, 5, it'd be a much higher degree, a top probably lasting a few weeks. Just going to add some data on. And indeed, it was a top at least similar, it looks like greater degree than these tops. So we kept it really simple. We did alternate time projections of both these advances. We did the recent high to high to high, and we did it from this news event high as well as this earlier high to this high, because they're probably actually tied into each other as, in effect, a 1 and a 3, as opposed to this news event high. And then we did the low to high, typically the maximum time, and that just came 1 day later than the high to high to high. So that's how we use some time factors, and you can just see as this market evolved is that almost all of the highs and lows were made near one or more of the time factors. So they can be really helpful to identify time targets and the strength and weakness of a market by looking at simple time factors that you can do with any market, any time period, any charting software. In this lesson, we're going to look at gold over a prolonged period of time and just look at several of the highs and lows and things you might want to be looking at, whatever market you happen to be trading. I like to keep it relatively simple with some basic time counts, marking off highs and lows, seeing where reversals are made, doing some basic alternate price projections and that sort of thing. So let's take a look at the gold market. By the way, I've been trading gold. My first newsletter was for the precious metals timing report that I began in the mid-'80s. That was just on gold, silver, and platinum. And it was a once-a-month report that was mailed out. Of course, it was about longer-term major trends, how things have changed, didn't it? From once-a-month reports, no one does that anymore, to eventually it became biweekly and then weekly, and then, of course, expanded to all the major markets. But anyway, I really like the gold market. It's a good market for trading. So what I usually look at is I'm not looking for those major trends. I'm not a gold bug or you think of gold as a hedge. It's simply a trading vehicle that does nice patterns, tends to reverse at basic retracements, alternate price projections, and some basic time factors. Of course, we're going to look at time factors here. Not that other markets are any better or any worse. It's just I've done gold so long that we're going to use that as an example because I'm always looking at it every day. So here we have gold. We've got 3 months worth of data, a little bit more than that actually, going back to the June 2021 high. So the first thing I always do with markets, as I mentioned earlier, is I just mark off the significant highs and lows and then see if there's any kind of consistency on when reversals are made. Basically looking for reversal cycles, not necessarily the cycle that picks every top and bottom. For many markets, they have reversal cycles, which I taught you about in the last chapter, where within a tight range of counts, they make a reversal. And it could be a high, could be a low. It's not specific to either a high or a low. So let's just take a look at what we got here. We had clearly a 5-wave decline, 20 trading days. Then we had an advance. What would we choose, this top or this top? Well, I had them both chosen to begin with, but 20 days down, this was 22 days up, and then the market turned around and had a sharp decline. Only 6 days down, but then look at the advance, 19 days. Now we got 20, 22, 19, pretty close range. A decline of 17 days, and then an advance of exactly the same amount of time, 17 days. This is what, a 6 or 8 day decline, and then a continuation to a new high. So just as of the last bar in this chart, what's interesting about this? Well, it looks like about every 17 to 22 trading days, we get a fairly significant reversal from a minimum of just about 2 weeks up to 3 to 4 weeks or so. So fairly significant reversals every 17 to 22 days. So the last reversal was on day number 17. We had 2 17 days in a row. This was the August 22nd. Only about a 6-7 day decline, maybe 8 day, whatever it is, but certainly not in that 17 to 22 day range, and then continued to advance. So what I'm looking for off of this last 17 trading day reversal is 17 to 22 days forward, in this case, for a probable high in the market. Now, 17 to 22 days, that's a 5 trading day range, but let's look at some other time factors and see, we may even be able to narrow that down. Just having a 5-day range would be helpful, but if we can narrow that down, it'd be even more helpful. So I've marked off, this is the 22-day count. That would be the maximum time from this high, from which we would anticipate this market would make a top lasting 2 to 3 weeks. Yeah, or at least, let's even say a week or two. Something significant, maybe something similar to this decline, and if not greater. Okay, so that would be 22 days out. What's 17 days out? Well, I just measured low to high forward. That would be on the 16th. So this, in effect, is 17 trading days. Now, I haven't talked much about this time factor. We've talked about low to high, and of course, high to high, low to low. But this would be low, high, extended forward, 17 days. It's like an expansion of time to where the next correction and advance lasts the same length of time as this advance. So at this point in time, it's the same as making a 17-day count. But there's one other key time factor that I have in here, And that is the significant here, low to higher low to potential high, and that's on the 18th. That falls right in the middle of this November 16th to 23rd time factor, the low to high. And what's the significance of that time factor? Well, the significance is more than likely that would typically be the maximum time before a comparable high, a reversal, possibly comparable to these two, certainly of these sorts of reversals. So it's a very significant point in time. We now have between the 16th and the 23, that's the 17 to 22 trading day count. And then we have earlier in the early part of that range, November 18th is a high probability to being the maximum count. And then I would say the 16th also, just because 17 days, we're going to be lucky enough to get 17 days a third time. Well, the whole point would be if gold continued to advance into November 16th, we would be on high alert for a potential top that lasted similar to this time period, which is a week or two, if not greater. So I had some data on this chart, and let's see when we reach this time period, if there's anything significant. We're going to kind of ignore price and momentum and all those sorts of things at this point in time. So that is November 16th. That is the 17 trading day count. What do we call this? We run into this now and then. Well, it's an outside bear reversal day, but it's more than that, in that it's an outside three-close bear reversal day. It actually closed below the closes of the past three lows. So that alone, boy, we'd be on high alert that potentially we've completed a top of reasonable significance. Would depend on the price position and the pattern position. Okay, let's take a look at a couple other setups. We're going to look at several reversals here in the gold market and see if we can just do some simple timing factors, see if that would help us identify some other reversals in the market. I've added some more data onto the chart, and as we can see, pretty significant decline. And it's actually, as of the last bar in the chart, it's closed below this swing low close. That's usually pretty negative and looks like it's having an impulsive decline. So is the market going to continue? Is gold going to continue with this 17 to 22 trading day reversal cycle? Well, let's just add 17 to 22 trading days from that the top on the 16th. Let's see where that falls. And let's just be prepared at that period of time for a potential reversal. And that's still several days away, it looks like, from this date. Is there any other time factors we might want to be alert to as of this time? Well, we might want to be aware of the recent low to low and any alternate time projections. That might be helpful. Let's just make it simple. I'll do this low to low. These are the significant lows. That falls a little bit before this just one day before the 17 trading day decline. So we don't need to do an alternate time projection of this 17-day decline. We've already done it. What if we do an alternate time projection of this net range from the first high to the low? Let's go ahead and do that as well. So we've got the 100% alternate time projection of both these declines. Guess what? This decline was actually 17 trading days also. That's why it falls on December 10th, the 17-day count from this high. So this was 17 days net decline, 17 days down, of course, 17 up, and then 17 to the next high. Well, we really want to be alert around December 10th, and beginning the 9th, goes into December 17th at the latest. But if gold were to continue to decline into this time zone between the 9th and the 17th, we'd want to be alert for potentially fairly significant low. Significant low meaning one that lasts, at least a week or two or more. Let's just add some data. Again, we're not looking at specific trade strategies or price relationships or patterns, although, of course, you're looking at this as an impulsive pattern. That's what it looks like, at least. There we are. As of the last bar in the chart, that is December 15th, little beyond those 17 trading day counts. But what's significant? This is the 15th. On the 17th is the maximum time probable, based on the reversal cycles, the alternate time projections, that sort of thing, to make a reversal and a low that would likely last at least a couple of weeks or so. So let me just add some more. There we go. You think this would have been helpful information? It doesn't hit spot on the day of the low, but it gives us a range of time, a minimum and a probable maximum, reasonably tight range from where a reversal ought to be made. So if we look at this low, and then it's right in that 17 to 22 trading day reversal cycle, what's the first thing we'd want to do to identify the potential time for the next top? Well, certainly measure 17 to 22 trading days from this low. And boy, it's really looking like, if we go back here and make this count from this area, 17 days, 19 up, 17, 17, 17. And this would be about 20. Boy, oh boy. We want to be alert to this, don't you think? Let's do that. I'm going to pause the recording and I'm going to clean the chart up, and I'm just going to put in the 17 to 22 trading day count, and then we'll see what other time factors we might use as well. So I've cleaned the chart up a bit. Now I've added the 17 to 22 trading day count from this low that we're looking at before, and I've added it as if it could be a low or could be a high. Remember, these reversal cycles are not unique to being either a high or a low, just that a reversal is typically made within that time zone and depending on what the trend is going into that period. So as of this point in time, we've got a pretty sloppy advance here with some overlapping swings, that sort of thing, probably part of a correction, which makes sense given that this was, probably an impulse decline. But as of the last bar in the chart, what else might we want to do here? We might want to make some high-to-high type of cycles, just some simple stuff. Well, let's do that. Let's just do this high, and let's say to that high, that final low before the decline. That's coming in right about where the market is now. Let's do just this simple high-to-high, most recent one. It's a couple days later. We're not getting a tight grouping here by any means. But let's go ahead and continue to advance the data. These I would be aware of at these times, but because we don't have like 2 or 3 time factors falling within a day or two of each other, I don't think they're going to be too significant. Big reversal decline. We're going to resume the bull trend, it looks like. Well, no, we're not. So now, just think about this. Keep it logical. We're looking around the 10th to the 18th, 17 to 22 trading days for a probable reversal. We've gone up about how many trading days is this? Did I hit the right one? Yep, January 3rd. Well, it's not 32. Let me mark off that low. 12. So we're well short of the 17 to 22, but now we've got a decline coming in, and now we're approaching that time period, the 17 to 22. It looks at, is that the date? That is 7th. Let me just click that off, and I'm going to take this off. I want to see how many trading days it is from this low. It's 16. So as of this reversal day, we're 1 day before this period when we've had reversals, significant reversals for the past several months, and we're 1 day before the most critical one, which is the 17 trading days. So we would want to be on alert for the potential of making a low at this point in time. What might indicate, let's bring a little bit of pattern into it, that this low is complete? Well, while this looks like a corrective advance, this could be an A, a B, and a C. And if gold closes into the closing range of the A, well, I'm keeping this really simple, aren't I? That would indicate an ABC correction could be complete, or as I like to say, the market's in a position to have completed an ABC correction. And possibly gold's going to continue to advance in a more complex correction than just this sloppy section. So we're just 1 day short of the ideal time. Let's add some data. Sideways, essentially big up day. More than likely, gold has now completed a low. It's 1 day off of this time target reversal cycle for a low, but usually they're fairly significant lows. So we may be in the early stages of an advance that could continue for some time. I'm going to erase that. And then let's do 17 to 22 trading days from this low. Maybe we can figure out a high to high here at some point. I'm going to go ahead and take these irrelevant ones off for right now. This was actually just 1 day from making the high to high to high. Useful for the short term anyway. So let's advance this data a little bit. Let me clean the chart up before we continue. There we go. We got the chart cleaned up a bit. I've counted forward from this low, the 17 to 22 trading bars. That's our reversal cycle. It's been pretty helpful up to now anyway. So let's do a couple other alternate time projections, high to highs, just the typical stuff we would automatically do once a market continued to advance in another cycle. So there's the alternate time projection of this 12 trading day advance that falls on the 26th. That's well before this 17 to 22 day reversal cycle. What else might we do? Well, I might do I'd always do at least this high to high. They're the significant highs, but it's not falling near any one of these other time factors. And we might do the higher time frame high to high, going all the way back to this high. And either to that high or the first significant high of this advance. Since that tends to fall near there, I'd go ahead and put that in. So far, none of these are falling near each other. And the one that I'd be most focused on is always the alternate time projection. So let me just make that thick. And I'm going to make it a color so it stands out and I don't forget it's there. So we might look into the 18th, some short-term top. Nothing really significant more than likely. The same with the 20th. That would be a possible reversal also, but because they're not close to each other, these are fairly close, 18th to 20th. Let's at least be alert to the position and possible pattern to the market going into that time. So I'm going to add some data onto the chart. So there we are as of this bar. We're right in that 18 to 20 time period for a potential top. Let's take a look what might be helpful. What's this pattern going? A, B, C, or a 1, 2, 3. There should be a 5-wave advance. So we can use a little bit of common sense pattern. Why should it be 5-wave advance? Because it's continued to advance to a new high. Now, I know we could have some kind of complex correction that this was something in X, A, B, C, Y, A, B, C, Z, something like that. But I like to keep it simple. Usually, if it's going to a new extreme, it's going to unfold in an impulse pattern. So I'm more than likely going to have a new high. There we go. As of the last day on the chart, that is the 25th, that's 1 day before our 100% alternate time projection, several days before our 17 to 22 day reversal cycle. And oh boy, the next day, well, I think we just made a top 1 day before the 100% alternate time projection. I'm going to erase these two. And what looks like a beautiful 5-wave advance and then a sharp reversal. Well, maybe this 17 to 22 day is going to be from this last low to another low. So let me add those on as a low to low. I'll just take these off, clean the chart up. And let's see where we're at if we approach February 2nd time period. Oh my gracious. Coming down very sharply. So far it looks like, well, we're almost beyond this time period, and the low's been quite a bit before that. We'll go add some bars on here. So this is just ineffective. We've broken this reversal cycle. Let me clean the chart up again. I'm going to pause it while I clean it up. We made the next significant low was well before the 17 to 22-day cycle. We've broken that cycle, that reversal cycle, going all the way back several months, every 17 to 22 days, focused around that really 16th to 17th and 18th trading day. We made a significant reversal. We had a nice pattern going in to that reversal cycle also, but no longer. This is broken at least at this low. So what's a couple things we might want to take a look at? Because this alternate time projection was just 1 day off of this advance. So let me just put in this high and this low. This was 12 days up, 11 days up. Do you think we're going to have a third one around 11 or 12 days up? Well, I'd sure want to be alert to it at that period of time. So let's put those in. And I'm going to do the 11 trading day alternate time projection because we would know the 12th is just 1 day later. So February 14th or 15th, we'd want to be very alert to a potential top that this rhythm was going to continue. So let me go ahead and add some data onto this chart. And that's the last bar, the last day of data that I have so far. This is up to the date of when I'm recording this tutorial. And what day is this? This is the 11th. Monday's the 14th. Tuesday's the 14th and 15th, which would be days we'd want to be very alert to a potential high similar to these highs. And that said, is there any other time factors around that point in time? How about a high to high? Oh boy. We've got, let me just square up the chart here. Oh boy, we really want to be alert come Monday and Tuesday. 12 days up, 11 days up, 11 to 12 days up, 14th and 15th. High to high to high to 15th. So we want to be very alert on the 14th to 15th for a potential high similar to these highs. Not necessarily the end of a bull market, but a high that's should last for several days at least and have a corrective decline. So it'd be something for a trader if we're trading like trends that last several days to a week or two. We'd want to be alert to that this advance has a good potential to terminate in the next 2 trading days and have a correction could be similar to either of these corrections, if not a greater time frame top. So I think you can see how looking at just some simple high to highs, low to highs, and alternate time projections, looking to see if there has been a fairly narrow range reversal cycle in the recent data. All of those can help us to identify time targets with a high probability of making reversals. Let's see how we might use the time bands to help us identify a probable, fairly narrow range period for a reversal. This is the yen, the dollar yen. This is the daily data. And for this period of time, as we can see, it was in a bull trend. Has a potential for having completed a 1 and a 2, 3, and maybe this is a 4, and maybe we're going to complete a wave 5. So let's take a look at a time target for the next high, which doesn't necessarily say that's going to be a wave 5 high, but for a high that would be typical, like one of these. Some of these were just a couple of days. I'll explain that in a minute. But the point is, when that next time target comes into play, if the yen makes a reversal on that time target because of the pattern position, more than likely that would complete a wave 5. That'd be good information to have. At least I think so. So I've marked off some highs and lows here, and I put a swing chart up where most of these highs and lows were. Some of them were pretty brief, some of them a little bit longer. So what I usually do when I'm looking to do measure the high to highs, and in this case, it would be the high to highs and the low to highs, so we can look for that overlap of those two ranges, is I use the momentum to help identify momentum cycles. And sometimes, even if it's not much of a price cycle, like in this case, it was just this reversal in 2 or 3 days, sideways to down, but it was a clearly defined momentum bear reversal. So I included that, and then included each time it made these bear reversals. Now we have, through this period of time, if I did not include this reversal, let me take that out. We have a fairly narrow range of high to highs, between 13 days as the low and 17 days as a high. Boy, that's a reasonably tight range, 13 to 17 days, except for this one period that was 25. Now, what's 25? Well, that's about a half of the low end of the 13 range. So I just looked at, do we have a momentum bear reversal? Well, we did. It was all the way down the lower part, almost in the oversold zone. Be right around in this area. So in that 11-day and 14-day, those are right around in the range of when these other reversals have been made, either price reversals or momentum reversals. So close enough. We're looking for the high to highs and then the low to highs. So let's work out what the time band would be for a comparable high to these highs that are shown. And potentially, it would be a wave 5 high, a much higher degree high. It looks like here, let me take this low off, because I should just have the high to highs up here. So we're going from a minimum of about 11 trading days all the way up to 20 trading days. So that's really, both the 11 and the 20 are outliers. I'm going to go ahead and leave them in. They're really focused around this 13, 14 to 16 trading days. I've already worked out the high to highs, and I'll just put them in the time bands here for the yen. So we have the I've already worked out the low to highs. So the high to high is 13 to 20 days, and the low to highs was 5 to 17 days. So it went from a really short low to high to the longer high to highs, and the 5 is a real outlier as well. That would be one of the really short ones that we had. So I've left the outliers in. So let's just go ahead and leave these in. What we're interested in is the overlap. Now, keep in mind, this is low to high and high to high in a bull market, and this was a bull market. So we're looking for the next top within a bull market on the overlap of these two ranges. So let me close this. And here's the high to highs and the low to highs. The overlap range, we go over here, it's a pretty wide range. It's from January 3rd to January 11th. So that's a pretty high range. The reason we have these time bands in the indicator window is so that we can look at if the indicator, in this case, gets overbought and makes a bear reversal within the time band range, then that is a high probability setup to have completed a comparable high within that time band. So since we're looking for a wave 5 high, why don't we just put in the external retracements here? Because typically, a end of wave 5 target reaches at least the 127% external retracement. So we're keeping it pretty simple here. If by chance the yen continues to advance and advances into January 3rd, and if the momentum is oversold at that time, it makes a bear reversal, and it has reached at least 127% external retracement, then we would have time, we'd have price, we'd have pattern, and we'd have momentum all coming together to complete a reversal. And really a key to this, a real helpful part, is this time band for the timing coming in to complete a comparable comparable high to these other bull market highs. But in this case, if it is near the 127% external retracement, and if the momentum makes a bear reversal, it would be an even, at least probably, a higher time frame high. Okay, I'm going to add some bars onto this chart. So we're already into, as of the prior day's bar, this was, what was the date of this? I think we're into this overlap. There we go. January 4th. So the overlap period began January 3rd. So this is fantastic. Here we are with the momentum overbought. We've had a big spike up on January 4th, tagging the 127% external retracement. Now, there's a lot of people that would be yen traders that would look at this and say this is a breakout above the prior swing high. And it would be a great time to buy to get long in this market. What we know is the yen has spiked up to the end of wave 5 price zone, right in the time band for the high probability of completing a high that's comparable to these highs. And what's the pattern? Well, potentially it's a 1, 2, 3. This could kind of be a 4. It's good enough that we would be looking at this as if it's nearing the end of this 5-wave advance. So we'd look for a daily momentum bear reversal. Of course, we would go to our higher time frame, weekly momentums and positions. We're just really focus on how helpful this the time band can be here. I'll add some more data. And there we've had a pretty substantial reversal. So now the question is, I was just going to say, the question is this a wave 4 correction or is it a higher time frame top? Well, it's come all the way down and closed into the range with a closing overlap of here, a real substantial decline. More than likely, we've completed that wave 5 top right in the time band for the top, right where the momentum made a reversal. And the time bands are pretty easy to figure out. We just count from high to highs. Let the momentum cycles help you choose the highs and the lows as well. And then we counted the low to highs. Well, I can put those in. I didn't have those in because I'd already done it, but we just want to do the swing lows. There we go. Those all go in, and it shows how, well, here's that short low to high, just 5 days, and then it continued for as long as the longest one looks like it was 12 days, 17 days. We went all the way from 5 to 17, but really focused in, 11 and 12, around 11 and 12 days into the high, which is exactly day 12 is when it made that high. So really helpful information to have. It's another sort of time factor that you can easily do, particularly when you have some nice identifiable swings in the market. And it can be a bull trend, it can be a bear trend, it can be a trading range, as long as you have some nice, well-defined highs and lows that you can mark off. And then we can do the time band for measuring the range of the high, in this case for a bull trend, for the high to highs as well as the low to highs. The overlap is the high probability target to complete a reversal. This is the GDX weekly data. Let's take a look at this data. If we were just looking at this series of data, this is over several months, six to 8 months or so, we could see, even though it's been in a bear market, we can see kind of a regularity of when it makes these lows every few bars, again, every few weeks. So I've marked off some of the kind of obvious lows on this to see if there is some kind of regularity coming off the May high. Well, it came down hard, especially this last week. 4 weeks down and then 5 weeks to another low, 4 weeks to the next low. 6 weeks to the next low. Now, this was all during a bear trend, and of course, the advances or the corrections are fairly short compared to the declines. And then something changes a little bit here. for the next few months. So we have another 5 weeks to the next low. And then we have another 6 weeks to the next low, which is almost a double bottom from this one in October. So it's fairly regular here that every 4 to 6 weeks, there tends to be a weekly low. And what's changed just in this data is that while these first few cycles were just an obvious bear trend, lower lows, lower highs, then we changed here. We had a higher low, and then the next low was basically a double bottom with the low a few months earlier. So it looks like the characteristic of this market is changing. Buying's coming into the market, potential low of a higher time frame than just the 2 or 3 or 4 week low that we've had over the past several months as of the last weekly low on the chart. And that was an outside bull reversal week. So we might be really interested in identifying the next time when the GDX would make a weekly low, either for trading the GDX itself or a mining stock. Of course, the GDX is, I think, small miners or gold miners stocks, gold miner stocks, gold mining stocks. And a lot of people trade those, and we first want to see is the sector having support, and is the sector in a position to make a low. Then we might go in and look at our individual stocks. I think we looked at Newmont Mining, for instance, in another lesson. So let's go forward 4 to 6 weeks from this low in December. So 4 to 6 weeks would be 20 to 30 trading days, because there's 5 trading days in a week, as long as there's no holidays for that week. So it would be 20 to 30 trading days forward from the week ending December 17th, whenever that low is in. So I'm going to go to the daily data and count forward. We're going to really see how we go to the daily data, and then maybe you use some intraday data to pinpoint a low. Here's the GDX daily data, and it doesn't go as far back as that weekly did, but goes back a few months. And here's that low in December. It was actually on December 15th, exactly the middle of the month. And if we count forward 20 trading days to 30 trading days, that's around January 13th to January 28th, we should make another comparable low to these prior weekly lows, which are represented by what's shown as the daily lows on the chart. So if nothing else, it probably should be a low that lasts at least 2 to 3 weeks. And if the market is reversing from a consistent bear trend, finding some buying coming into the market, so we have a potential for the beginning, the early stages of a bull trend. Let's add some data on the chart and see if we get in a position to where a weekly low should be complete. Now, as the last bar on the chart, this daily bar, came before the 20 trading days forward. So even though it did make a pretty sharp reversal here, and it made a bull reversal in the momentum, is that if this low-to-low cycle is to continue, that's too early to complete another comparable weekly low. So more than likely, the GDX has not completed the low, and it's going to come back and test that low, maybe even exceed that low. Oh boy, are we right about this? There we go. While we had a sharp advance and then a sharp decline. This was too early to be in the 4 to 6 week period for a low. Now, as of the last bar in the chart, what day is that? That's January 27th. So if this 4 to 6 week low to low is to continue, that low should be made within the next trading day. And let's take a look at where we're at here, is that the daily momentum has reached oversold as of this point in time. Let's go down to some intraday data. I don't encourage people to day trade, or trade really short term, but the intraday data can frequently help you pinpoint a more narrow range of time and price when you're looking for a higher time frame reversal. So I'm going to look at the intraday data as of January 27th. So this is the GDX, it's the 60-minute data, and we can see that there is a decline, 34 bars, a correction, and then a decline to a new low. And if the higher time frame trend has reversed to bullish, then this decline, I'll go back to the daily real quick, this should be a correction, shouldn't it? It should be a correction, and when it's complete, the bull trend then, well, if it's going to develop into a bull trend, should continue. So let's do two things here. Keep it real simple. Let's do the 100% alternate time and alternate price projections of what I got labeled the wave A decline from the wave B high. So we'll start with the 100% alternate time projection. So I'm just measuring 34 bars on the downside, and then I'm going to measure 34 bars from what I got labeled as the wave B high. Let me square the data up a little bit. Let me do also the 100% alternate time projection. Again, we know as of the last bar on the chart, let me just move that down a little bit. As of the last bar of the chart, we're within 1 day of the extreme of that 4 to 6 week low to low cycle. Pretty significant point in time. So if we do the 100% alternate time projection, that also falls on the afternoon of the 28th. And again, if we're looking at the daily data, the 20 to 30-day counts, that's the 30-day counts, the 28th. As of the last bars on the chart of the 60-minute data, it's reasonably close to this 100% alternate price projection as well. One other thing we might want to put on here, and I'm keeping this real simple, but whenever a market's in a position to complete an ABC correction, and it's in working on potentially a wave C, just put the parallel channel lines where the beginning of the ABC to the wave B high, and then you do a parallel line from the A. That's a real typical area to where the wave C would be complete. So we've got 100% time on the following day, 100% price, a little bit below the market on the 27th, and then there's the channel line, which is a bit below the market. So we should be in a position by the next day to complete a weekly low. Let's just add some data on the chart. So what are these, by the way? What are these little kind of these bars that look like it has no trading? And that's basically the case. It's just, this is how E-signal, this data is captured from E-signal. So it's how E-signal captures the data. And of course, we know on the GDX, it doesn't trade 24 hours. So these are some just little bars after market settlement. I leave them in here, but there's not a way to remove them. But because it's consistent, is that at the end of each day, beginning of the following day, there's a couple of these little bars. So it's real consistent. So we're just looking at ratios of time. So it doesn't matter. I'm going to keep adding some data. We've exceeded a little bit the 100% alternate price projection. We're right around where that channel line is. And here's the 100% alternate time projection the following day. So we know on the 28th, this is the day we want to be alert for possible change. Let me add some data on the daily. Here's our daily. We knew the daily was oversold. Let's add one more bar. That's the following day. It's the 28th. It doesn't look good, does it? What we might take a look at here is just, it's nothing you'd make a trading decision on. But when you have a bar like this, it opens near the high, comes down hard during the day, and then closes back near the high of the day. That means there's buying that's coming into that market at that period of time. Let's just do the 100% alternate price projection while we got this here. We've already done it on the intraday, but I'm going to do it right here also. That's where we're at. Let's add some data on. Here's a trade strategy that I would use on this is a close. Again, you know I like closes, especially on this kind of data. A close above 29.68 would be a go-long setup to have completed this corrective decline, which puts the GDX in a position to complete a weekly low as well. And this would be fairly significant if the GDX closes above this close made just before this gap down. And of course, the daily momentums are oversold. There we go. Wow. As of this day on the close, that's a specific go-long signal for a potential of the GDX to have completed a low that's going to last at least 2 to 3 weeks, if not more. And if this is a correction, eventually continue to above this high. So you don't need a calculator to figure out a lot of potential reward, pretty minimal potential risk where you'd have your stop. And I'd put the stop as a close below the prior day's close because that's the low close before the entry was made. Great setup on the long side. I'll just add a few more days. This is very recent, by the way. So there's a few more days, and indeed, the GDX continued to advance to above that high. So the timing factor was really important in this setup. The timing factor gave us a fairly broad range of time between 20 and 30 days, the 2-week range of time to prepare for a probable weekly low. And then we went into a smaller time frame, identified a potential ABC correction. We did the 100% alternate time and price projections, which was right around where the low was made. And the day afterwards, the GDX made a bull reversal. So fantastic setup on the long side. This is fairly recently, by the way. So once again, when time and price and pattern and momentum come together, you've really got an ideal setup with minimal capital exposure. This is Bitcoin weekly data, and it covers about a year's worth of time from this major high that was in April 2021. There is a 10-week declined over 55% in those 10 weeks. That's quite a decline. Then it had this 20-week advance. And then as of the last bar in the chart, which was also 10 weeks, or the 100% alternate time projection of this decline, the Bitcoin had declined almost 51%, very close to the decline that occurred back in April into June. So we're at pretty close, 100% alternate time and price of this major decline from the November high, very close to that. And the weekly momentum, the 8 has reached oversold. What more is significant about the position of the weekly momentum on this that you learned in the momentum course? Well, we've got a lower low in price, a much lower low in price, yet the momentum is actually at a higher level than it was at the last momentum cycle low. So that's, at least it's a wake-up call. The buying's coming into the market, and it's what's called a price momentum bullish divergence on the weekly data, so that's fairly significant. So we might want to really be alert as of the end of this week for the potential of completing a weekly low. What else is interesting here? Well, we also had the 100% alternate time projection, not just of this major cycle, but also of this 4-week decline, and then 4 weeks from the last cycle high is this past week. That's the 100% alternate time projection as well. And if we measure this in price, 100% alternate price projection is just below the low of the last week. This is 2 degrees of 100% alternate time projection, one of this major 10-week decline from April into June, and then the 10-week decline from November into this last bar on the chart, that's the week ending January 22nd, and then this 4-week potential wave 8 decline from this potential wave B high. This isn't necessarily a wave A and B and C. It's going to complete a correction. We need to look at data going back much further, but it's really a good position to be measuring time and price targets on the downside. So, boy, this is a major wake-up call. We want to be alert for any reversal signals in Bitcoin for a potential, at the very least, for a weekly low. That'd be a low that would last for 2, 3, 4 weeks, maybe much longer, maybe have a fairly significant advance. And, of course, with Bitcoin, percentage changes are pretty significant. Even the 2 or 3 week advances can be 20 and 30% percentage change rather rapidly. So it's a great market to trade, and you don't have to trade Bitcoin. You can trade like the GBTC. That's an ETF that follows Bitcoin tick for tick pretty much. Okay, that's our weekly setup. This is the wake-up call. Everything's coming together, or pretty close to coming together, ideally, as of this week ending January 22nd. So now we might want to go down to the daily data to see where we're at, time and price-wise, momentum-wise, and look for a reversal signal to complete this weekly low. So I'm going to go to the daily data, and that's as of the last weekly bar in the chart, which is the week ending January 22nd. So if we do the daily alternate time and price projections of this initial decline into the December 4th low, that was 24 days down, actually 23 days correction, and then another 24 days down would be January 20th, so actually 2 days before this January 22nd low. Let's take a look at where we're at. So we're off by a couple days so far of the 100% alternate time projection. We're pretty close on the alternate price projection, a little bit short of that. And again, I measure the major cycles in price, alternate price projections, by percentage change. So this initial decline was 38.65%. And that's coming off of a top at 69,000. If we did a 38% decline from the top at 52,100, we come in at about 31.9. Let's just call it 32,000. But if we measured it by the price range, it's going to be far below that, because a 38% decline off 69,000 is much different in price range than a 38% decline off of a $52,000 price. That's why I do these by percentage change. So by percentage change, again, the low as of the 22nd is just a bit off of the 100% alternate price projection, which comes in at around 32,000. It's just 2 days beyond the 100% alternate time projection based on the daily counts. But here's what's significant. We know that the weekly momentum reached oversold that week, and the daily momentums have reached dual look-back oversold. So a daily momentum dual look-back bull reversal will put the weekly momentum oversold, the daily momentum's dual look-back bull, and that's a dual time frame setup to be in a position to complete the higher time frame weekly low, right in the 100% alternate time and price projections for a potential significant low. So there we have it. We've identified real simply using simple time factors of 2 degrees in this case, using simple price factors, and using dual time frame momentum, and then potentially this pattern coming down 1, 2, 3, 4. Potentially it's in a wave 5. And we could put the 4 over here. It's just that it's clearly defined. Wave 1, a correction, another impulsive decline, a correction, another impulsive decline. And it looks like the 1 is by far the shortest of 1, 3, and 5. 3 is definitely longer. And then the 5 might even be longer than the 3, as long as the 3 is not the shortest of 1, 3, and 5. Fantastic setup. So what would be a trade strategy? Well, we get a daily momentum bull reversal, and then a little inside day made made a dual look back bull reversal on a higher close on an inside day. So a good trade strategy in this case. If we were to close the next day, we want to see some follow through the next day and close above this close, be a good setup in the long side. And that's the setup for those of us who like to buy the bottoms and sell the tops. If all the technicals are in position, the safer setup would be that Gann setup, and that the safest time to buy is on the initial correction against the new trend. So again, if we get this reversal, get a higher close, we'd wait for the next cycle in the daily momentum to make a bull reversal and then go long. So a close above the close of the 2 days prior, that'd be a great go long setup. Or the Gann setup, we would wait until we had a correction, initial correction against this probable new trend, and then we either make a daily momentum bull reversal or we take out a swing high, that sort of thing. So let's just add some data, and well, there's the initial go long setup. Again, if we're looking to catch the bottom, and I only recommend doing that when we have everything in place. We had daily and weekly momentums oversold, bull reversal. We have a potential 5-wave decline. This looks like a nice little 1, 2, 3, 4, 5 to finish off wave 5, time, price, everything in place outside bull reversal day. So that's a great setup with minimal capital exposure. But again, let's add some data and see where the safer time is for an entry strategy. So we've had the ideally is we make another cycle and a bull reversal in the daily momentum. So let's see if we complete some sort of correction. So here's what I would be looking at right now. This is obviously, we've already made the bear reversal sideways to down. You can also, and I'm going to use closes. If Bitcoin were to close above this February 1st closing swing high, that would be the next go long setup, more or less based on the Gann setup. Well, there we go. The next day, closed strongly above it. So this wasn't an ideal sort of corrective pattern, but here we had an advance, continued advance, higher, couple-day correction. I didn't do any price retracements or anything. It's just if we looked on the closing data, we can see an advance and then some kind of couple-day corrective decline. Didn't reach the oversold zone, but that's when we want to start being alert to entering on when we close above a minor swing high close. Great setup on the long side, either one of those two we mentioned, and so far looking pretty good.